Traders, we are looking at gold on the daily time frame. I could scrunch this up and consider this a weekly time frame. Let's just go out to the weekly. I want to show you what I've got marked up, and then we'll come down to the daily and the 4H and look at some potential entry points for trade. Maybe a counter trend and a buy opportunity, but yeah, we'll check it out. So have a look at see where we're trading at the moment. We've traded up with a vengeance. First time solid candle has entered this zone. Look at this zone through here. How thin is it? And every time the market has traded into this area, this zone, look at the result. Huge sell-off. Down we go. I mean, that's massive. So at the moment we're trading back into this same zone here. This is big liquidity up here, guys. We've got this range left. These candle wicks, we've got this bearish move here. There's a ton of stops sitting up in here. This is moving into it and soaking up or whatever orders there are in the system, in the order book up in this level here. I can't see this blasting through here without, a decent pullback, to be honest. Anyway, so what I've done, I've marked up these weekly highs, candle bodies, wicks, candle wick. Well, we've got this one, and then we've got this one over here. Potential targets if this continues bullish, and if we go down to the lower time frame, that'll make sense. Here we are on the daily. Every time we've actually traded up into here, look at the reaction. Really strong reaction. Well, yeah, you know the story. And I'm really wary at the moment. If we see some kind of reaction here, how far does this retrace? That's the question. So there's a couple of ideas. Is there enough liquidity up here to cause this to trade back down? I mean, look at that retrace, okay? Does it do that or something like that? That's the question. You want to be really, really careful up here. I mean, a counter trend trade could be a thing, but wait for the setup. We'll have a look at that on the lower time frame in a sec. We're having these price swings, low to high, down to swing low, swing high, swing low, swing high, swing low, and then off to the races. We've got these beautiful pullbacks for a 61.8 fib retrace entry point. Buy here, buy here, buy here. Really nice. Then that happens. If you're going to pull a Fibonacci and you're looking for the 61.8 fib retrace, it's going to have to come from the point of origin with this price swing, right? So if we go from low to high, that brings the 61.8 fib down into this level here that coincides very nicely with trading through rebalances, trades through liquidity, and gives them enough, whatever it is they need, to target these other highs up here. If I'm going to buy, it's going to be down in here. We've got a weekly level here. I'll mark that up. Okay, there's a potential trade idea here. Stop loss, yeah, around the low here. And we get, what, a 1 to 2? Nearly a 1 to 2. About there, okay? So there's a 1 to 2 risk reward on the daily time frame. Pull back down in here. Okay, you could set an alert to go off, or you could set a pending buy order or something like that. Not financial advice, of course. Down on the 4 hour, if you're looking for the lower time frame setup, I was in here earlier and it looked pretty similar. See, we've got, you're trading on different time frames. So that's a daily. Let's just take that out of the way. That's the daily idea. Now the 4 hour idea is a bit risky, and let me just show you why, okay? If you're looking at these swings, well, you've got this accumulation range here on the 4H. Okay, you want to trade it on the 4 hour. All right, well, this is what you're going to be looking at. And let's just grab a Fibonacci, 4H, low to high. The entry point on the 4H, 61.8 fib, brings you in up here. So it's not that different from considering the daily. Look, there's only a few points difference in the entry point. And given the volatility of gold, I'm inclined to go for that. 4 hour, I'd go the deeper pullback, and that would be my entry point there. 4 hour trades into a 4 hour, the high of this 4 hour accumulation range. Makes a lot of sense. If you wanted to counter trend trade it, good luck, but the thing to look out for would be this. Let's just go down now to a 1 hour. We've got this thing marked up, we know our levels. Here's what I'd be looking for if I was going to counter trend trade it. We've got this range. Let's just grab that and down. I don't know how long this is going to spend here, but if the big guns want to get serious, they're going to be forcing this to trade sideways so that they build liquidity above and below the range here. If they're going to short it, watch for a spike above and then look for something like this, the retrace up to retest, rebalance, all right, and then, you know, we're off. Okay, so that's the idea for a short. Now, you want to see them take out liquidity here. All right, obviously they're building a range for that purpose. It's starting to shape up. Okay, they hit that. What you want to see here would be a long thin candle, and then the retrace back into rebalance, and then there's your entry short. Okay, so if you're in front of the computer and you're able to, yeah, watch it into the London Open, the Asia Close, and the New York Open. They're the times to be watching this. London Open, New York Open, that could be the opportunity. So who knows, you know, do we see this happen in the London Open, trades back up, New York Open, do we get that? Right? That's something that happens quite often. This is the price action that I'm looking for. So that's an idea for a counter trend. And then, of course, if it trades down in here, look for the same thing, basically. Of course, it's not financial advice, but if you place a pending order down here, well, good. But what you could do then is wait for, you know, if it sort of wiggles around, you know, we get that. Look for the same thing down in here. You want the range, and then you want to see it hit liquidity under, you know, something like that, and you get the same thing. So that's the kind of price action. You want to see the range, the stop hunt, and this thin candle where there's an imbalance and it comes back, trades back down to rebalance, and there's an entry point long. Okay, so if you're sitting in front of the charts, that's something to look out for. I personally don't want to be sitting in front of the charts, and what I tend to do is set pending buy and sell orders, you know, limit orders at the levels that interest me. I'll do that. But anyway, that's my take on gold, guys. Look, I'd love to hear your thoughts, any feedback. Do comment, check out the links below, visit, join our Telegram group. It's free to join and you're most welcome. So with that, have a great day, safe trading, and we'll see you in the next video.